Hey everyone, welcome back to Delta Edge, your ultimate guide to the stock market. Today, we're diving into a hot topic that everyone wants to know about: mutual funds with high returns. Now, you might be thinking, high returns? Sounds risky, and you're not entirely wrong. But here's the thing, investing doesn't always have to be a gamble. With the right knowledge and a sprinkle of patience, you can make your money work for you and achieve those financial goals you've been dreaming of. Whether you're a seasoned investor or just starting out, this video is packed with insights, tips, and a bit of fun to keep you engaged. We'll break down different types of mutual funds, explore their potential for high returns, and give you some top picks to get you started. Let's get started. Alright, let's kick things off with equity mutual funds. Now, these funds are like the cool kids in school. They invest primarily in stocks, which means they have the potential to bring in some serious returns. Think of it like this. When you invest in stocks, you're essentially buying a tiny piece of ownership in a company. And if that company does well, guess what? So do you. But hold on, before you go all in on equity funds, it's important to remember that with high potential returns comes a bit of a roller coaster ride. The stock market can be volatile, meaning prices can go up and down like a yo-yo. But hey, that's where the fun part comes in, right? Okay, enough with the metaphors, let's get down to business. Here are our top equity fund picks. First up, we have the ABC Growth Fund. This fund is all about finding those hidden gems, the high-growth companies that are poised to explode in value. They've got a team of expert analysts who spend their days digging deep into company financials, market trends, and all that good stuff to identify the next big winners. And let me tell you, their track record speaks for itself. Over the past decade, the ABC Growth Fund has consistently outperformed the market, delivering impressive returns for its investors. Now, if you're looking for something a little more stable, a bit more set it and forget it, then the XYZ Blue Chip Fund might be right up your alley. This fund invests in large, well-established companies. Think household names with a proven track record of success. These are the companies that have weathered economic storms, navigated market shifts, and come out on top. So, while you might not see those explosive growth spurts like with the ABC Growth Fund, you can sleep soundly knowing your money is invested in solid, reliable companies. But remember guys, this is just a starting point. Before you invest in any fund, it's crucial to do your own research, understand the risks involved, and make sure it aligns with your overall investment goals. Now let's move on to sectoral and thematic funds. These funds are like specialized tools in your investment toolbox. They allow you to target specific sectors or themes that you believe will outperform the market. Think of it like this. Instead of spreading your bets across the entire stock market, you're focusing your investments on areas with the highest growth potential. Let's say you're super bullish on the tech sector. You know, artificial intelligence, cloud computing, all that jazz. Well, instead of investing in a broad market fund, you could invest in a technology sector fund. These funds specifically target companies in the tech industry, giving you more exposure to that particular sector's growth. And it's not just about technology. There are sectoral and thematic funds for practically every industry and trend imaginable. Healthcare, renewable energy, real estate, you name it. The key here is to identify sectors or themes that you believe have long-term growth potential and then find funds that align with your investment thesis. So, without further ado, let's dive into our top picks for sectoral and thematic funds. First on the list is the PQR Technology Fund. Now, we all know the tech sector has been on fire lately, and this fund has been riding that wave like a pro surfer. They've got a laser focus on identifying the leading tech companies, the innovators, the disruptors, the ones who are shaping the future. From software giants to semiconductor powerhouses, this fund has got you covered. Next up, we have the STU Healthcare Fund. As the global population ages and the demand for healthcare services continues to rise, this sector is poised for some serious growth. The STU Healthcare Fund invests in a diversified portfolio of healthcare companies, from pharmaceutical giants developing life-saving drugs to medical device companies pushing the boundaries of innovation. But remember, just like with any investment, it's crucial to do your due diligence. Sectoral and thematic funds can be more volatile than broader market funds, so make sure you understand the risks involved and invest accordingly. Chapter 3: Small Cap Funds: Unearthing Hidden Treasures. Alright, let's move on to the world of small cap funds. Now, these funds are like those hidden gem restaurants you stumble upon. They might not be as well known as the big chains, but they've got the potential to serve up some seriously delicious returns. Small cap funds invest in, you guessed it, small cap companies. These are companies with a market capitalization typically below $2 billion. Now, they might not be household names yet, but they're often characterized by their agility, their innovation, and their potential for explosive growth. Think of it like this. A large established company might only grow at a rate of, say, 5 to 10% per year. But a small cap company with a groundbreaking product or service, they have the potential to double, triple, or even quadruple their size in a relatively short amount of time. Now, of course, with that potential for high growth comes a bit more risk. Small cap companies are often in their early stages of development, and their success isn't always guaranteed. But for investors willing to stomach a bit more volatility, small cap funds can be a fantastic way to supercharge your portfolio's returns. So let's dive into our top picks for small cap funds. First up, we have the LMN Small Cap Fund. This fund has a stellar track record of identifying small cap companies that have gone on to deliver substantial returns. Their team of analysts scours the market for companies with strong fundamentals, disruptive business models, and a clear path to growth. Next, we have the OPQ Emerging Markets Fund. Now, this fund takes the concept of small cap investing to a global scale. They focus on identifying promising small cap companies in emerging markets like China, India, and Brazil. These markets often offer even greater growth potential than developed markets, but they also come with higher risk. Remember, investing in small cap funds is not for the faint of heart. These funds can be volatile, and it's essential to have a long-term investment horizon and a stomach for some ups and downs along the way. Chapter 4: International Funds: Going Global for Growth. Alright, let's wrap things up with international funds. Now, we've talked a lot about investing in the US market, but guess what? There's a whole world of investment opportunities out there. International funds invest in companies based outside of the United States, giving you exposure to global economic growth and diversification beyond the US market. Think of it like this. If you're only invested in US stocks, you're putting all your eggs in one basket. But by diversifying your portfolio with international funds, you're spreading your risk and tapping into the growth potential of other economies. Now, there are two main types of international funds: developed market funds and emerging market funds. Developed market funds invest in companies based in countries with advanced economies, like Japan, Germany, and the United Kingdom. These funds tend to be less volatile than emerging market funds, but also offer slightly lower growth potential. Emerging market funds, on the other hand, invest in companies based in countries with rapidly growing economies, like China, India, and Brazil. These funds offer the potential for higher returns, but they also come with higher risk due to factors like political instability and currency fluctuations. So, let's dive into our top picks for international funds. First up, we have the VWX Global Equity Fund. This fund invests in a diversified portfolio of top companies around the world, giving you broad exposure to global economic growth. They focus on companies with strong financials, solid management teams, and a proven track record of success. Next, we have the YZA Emerging Markets Fund. This fund focuses specifically on high-growth emerging markets, offering the potential for significant returns, but with higher risk. They invest in a range of companies, from technology giants to consumer goods companies, all poised to benefit from the rapid economic growth of these developing nations. Remember, investing in international funds is a great way to diversify your portfolio and tap into global growth opportunities. Just be sure to do your research, understand the risks involved, and choose funds that align with your investment goals and risk tolerance. So there you have it, our ultimate guide to mutual funds with high returns. We've covered everything from equity funds to international funds, giving you the knowledge you need to start making informed investment decisions. If you found this video helpful, give it a thumbs up and subscribe to Delta Edge for more insights into the stock market and investing. And don't forget to hit that notification bell so you never miss an update. Got questions or thoughts about high-return mutual funds? Drop them in the comments below. Remember, investing is a journey, not a sprint. Start small, stay informed, and watch your money grow over time. Thanks for watching, and happy investing.